Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. Hope everybody's having a great trading session. Happy Monday to you. I'd be happier if we had some follow through. You know, Amanda mentioned it in the chat room. It's a sloppy trading day. You can see some pretty key supports were tested, like the Aussie. You know, we just basically reached for 77 cents and bounced. Kiwi flagged support, bounced. You know, you take the euro dollar. The euro dollar's approaching this 50% retracement, that 119, 10, but we really got to get below the 618 for me to get excited. And we have seen the equity markets pull back a little bit. I mean, I wouldn't call it really much of a pullback. I think what we have to see really, like in the S&P, I'm just going to point this out really quick because it's the other indices too. We really got to see. I know I've said, we've got to drop below 3,900, but really just need to start making like lower highs and lower lows in order for anybody to get excited about anything for that matter. Crude was pulling back today, but crude has bounced. It is pulling back, but you can see it's bounced pretty aggressively as we came up towards that $64 level, which I think is a pretty important, breakout point. The question is, are we going to actually make a move? And my answer is probably not ahead of the FOMC. So as crappy as that is, it is definitely something that's not exciting me at all. One of the things, I'm still long some euro sterling. I am, and I've been long for, ever since we were up here in this 86.30 level. I still own some. It's a small position, but what I want to point out is we're actually trying to base here, and it's one of those. It's not necessarily a trade that I'm looking at as, oh, I'm going to make a killing on this trade. I'm gauging it more as a kind of a risk on, risk off barometer too. As the pound underperforms the euro, that tends to be a risk off type of environment typically. So I'm always looking for different pieces of the puzzle to put together, and this is one of those that I'm just kind of paying attention to as we muddle around in the markets. Paulie had mentioned a little bit earlier that the Chinese markets were under a bit of pressure, and I've got to say, if you look at the Hang Seng index, it's not favorable for risk on. Now that's the Chinese market, obviously, and how much does this translate into U.S. equities or a real risk on or risk off move? At this point, not a whole lot. But it's something that, again, you kind of monitor, you keep it on your radar. And given the fact that that we got kind of close to the 200-day moving average, and we're stalling at previous support, previous resistance, previous resistance, previous resistance, previous support, breakdown. Now it's resistance again. If the Chinese equity markets start moving back towards this 200-day moving average and maybe lower, that might be, again, another thing that signals risk off. Now, it's not, the Chinese markets may not have a direct correlation to U.S. equities, but what it may have correlation to is the yuan. And so if you see the yuan or the renminbi, whatever you want to call it, if you start to see the U.S. dollar Chinese yuan rally, that's another signal of risk off, because that means China is trying to manipulate its currency lower and to help the Chinese economy, if you will. So this is one of those currency pairs that you kind of keep an eye on, because A, it's already broken the downtrend line, but B, yeah, we start rallying here. Again, it's just one of the puzzle pieces that I've got an eye on. I'm keeping my eye on right now. We've also had a nice recovery in like the US dollar Norwegian krona. This was, I was just looking at just before we started here. Again, the base is still building. I'm not convinced that the US dollar Norwegian krona is going down. Matter of fact, I actually believe it's going higher. Crude oil prices have rallied quite substantially in the last several months. And, as I pointed out, I think earlier today or over the weekend during the week ahead video, the, prices at the pump, and I really don't pay attention every, day in and day out. Although I, we do fill, well, I end up filling our vehicles with gas quite a bit because my son, he's, unlike a lot of parts of the world, we're pretty much open around here. I mean, I know it's, a lot of places around the world are closed, so to speak. We're pretty much open. That's why our COVID, levels have been our COVID cases have been high and whatnot. But my son plays a lot of soccer, and he's in a competitive club. So we are driving around town all the time, and so I'm always filling the gas. And it's not something that I really paid a lot of attention to over the last 12 months, up until like this last month. Because like I'll give you an example. 12 months ago, or when the crisis first hit, I was like, man, this is great. I'm filling my gas tank for like in a truck, in a truck. I'm not talking our other vehicles. I'm talking just the truck that we take our whole family around in. It would cost me like $35 to fill the gas tank. Now it's like $55, and it just really hit me over the last couple of weeks. I'm like, yeah, when you spend $50 to gas up your tank, and then I had to do it like twice in a week, I'm like, wow, I'm gonna spend a lot of money on gas. But it's not so much that, it's more of the, okay, well, I'm noticing it. How about somebody who really has to, they're stretching their dollar paycheck to paycheck or something like that? How does it affect consumer spending? It's got to get to a point, it's got to be close to a point where it really starts to impact consumer spending. In a great economy, back when we, pre-financial crisis, when crude oil was at, 150 or whatever, and we were paying like $4.50 for a tank of gas in Texas, which is, obviously if you're in California, it's like over $6, whatever. It really starts to get people traveling less, carpooling, and being that we're fresh off of a pandemic, I think it's something that we do have to pay attention to, especially with I want to say not necessarily the unemployed, but people that are in the service sector that barely even has a job. Maybe they have lost their job, maybe they're searching for jobs, but that's a huge part of our economy. In the US economy is the service sector, which, that's why our unemployment's still pretty high. But those are the drivers too. When I say drivers, those are the drivers of the economy, not necessarily, physically driving. So the reason why I'm pointing all this out is because crude oil, I feel, is probably near a peak, where demand's going to start to weaken. You're going to get OPEC and other, countries, maybe even the US and Canada and, Norway, they might actually, step up production levels, flood the market a little bit with more oil, try to capitalize on these higher prices. And we might see crude come down a little bit. And if we do, then that's when you start to see the US dollar Norwegian krona that's been building this really nice base really take off. And, so I'm keeping a very close eye on the US dollar Norwegian krona. Yes, I have a position. Yes, it's not super aggressive. Yes, I'd really like to double my position in it. Yes, it has to be above 870. And once it gets above 870, once it's above here, this is where I double up my position, because then you got false breakdown, double bottom, should extend us out to about somewhere up to these levels. at some point. I'm not saying it's going to do it now, but it's at some point. And that's why I monitor it rather closely, because I would like to double what I have. I haven't done that yet. But it's also another sign of, potentially risk off too. Last thing I want to cover is the cryptocurrencies. Bitcoin's trading heavy. People will use the excuse, well, it's India that's not allowing for, they want to ban cryptocurrencies. Fine. When is it going to be not just India? Price action is still, when you're looking at an asset class, especially like Bitcoin, price action is everything. And regardless of what happens from here, what we can't deny is that Bitcoin had a false breakout over the weekend. Right? So, if we slip below 52,000 in Bitcoin, below this like upsloping ascending trend line, with this divergent relative strength, and that's, to me, is signals that, this asset class might come under pressure and really probably put some downward pressure on some of these, whether it's stocks or maybe even the dollar, gives the dollar a little bit of a bid. So again, just a few things that I am paying attention to. If you are not in our chat room, just let you guys know, for those of you not in the chat room, I picked up a little bit of dollar Mexican peso down here. I picked it up at 74 on this dip right here. It's dipped obviously a little further, but I sold some a couple weeks back above 21.50 over here. So I'm just adding back what I sold. I'm not ignoring that we might have a head and shoulder pattern here. I'll deal with it if we get back to 21, what I'm going to do with the, what I picked up. But if we get back to 21, I might let it go, but it depends what's happening then too. If the dollar Mexican peso is back at 21, like let's say we do one of these, right? And we head back to 21, it looks like a head and shoulder pattern. However, you take the S&P, and the S&P is like breaking through all sorts of supports like this, breaking through these supports. I would probably be keeping the dollar Mexican peso long, So again, I'm added a little bit today. I'm not going to make a decision what I want to do with it until I see what's happening at that time. Should we get back to 21? I like the fact that the dollar Mexican peso is holding above the 618 retracement too. I do. All right. Let me see. Amira says platinum and silver. Yes, I'll look at platinum and silver for you. First of all, silver, last I looked, isn't doing squat. And as I mentioned to you, this area between, let's say, roughly $27 and $25, you're in the middle of no man's land right now, in my opinion. Like, get bullish above 27, or even maybe above 26.50, or get bearish below $25, because then we're probably talking mid low 20s again. So is there anything going on in silver right now? Not a thing. And I honestly don't know how to read it at this point. I don't have, there's no edge to trading it right now for me. Platinum. Let's take a quick look. Oops. I think I have some drawings on the Trading View CFD. Yeah, I do. Here's your 4 hour. Oh. I don't think a lot's changed there. Dips down to this. I remember talking about it last time here. Yeah, dips back down to this breakout point's probably where I'd want to be long. Why is that there? I should look more like that. That's probably, the level, 50% retracement, maybe a 618. This would be the 24% retracement longer term. Yeah, I don't know. I don't think there's a whole lot to do with it right around here either. Dimitri said, hey, Blake, have a look at the, XAU gold versus Bitcoin. Looks very heavy, but also unsustainable. Yeah, so maybe gold, maybe gold over Bitcoin. Well, but the narrative it was right now, Dimitri, and let's just take this into account. And I guess the only time that you would see gold outweigh Bitcoin would be in a risk-off environment. So if we get in a risk-off environment, you'll probably see another spike like this. I just don't know if I'd play it longer term. I'm trying to put myself in the shoes of unless something terribly happens with Bitcoin or cryptocurrency, which I think it's a recipe for disaster. First of all, I think that governments are going to come through and they're going to heavily regulate cryptocurrencies. They're going to tax the poop out of them. They're going to come after cryptocurrency. It's not a matter of when, it's if, or not if, it's when at some point. And that's probably the time you want to be a seller of cryptocurrency. India already banning cryptos. That's like, I think maybe if you want to look at it like the canary in the coal mine, that might be it. But I think you need to see a broad, adoption of that type of activity amongst other central governments or other countries. Because as of right now, if you talk to like the younger generation, not people of my age, 50, 60, 40s, we all view gold as a place, a storage of value, because it's it's a physical commodity, or we can own it, we can touch it, I can keep it at my house, which I do. I put it in my safe, blah 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 blah. Great. But most younger generations, they're like, why would I own gold? I'm gonna own something that I can just put in a wallet, and it's digitally, it's there, it's got my name on it and whatever. So that, unless governments really come after cryptocurrency, which I think they're going to at some point, but until that happens, the Bitcoin is always going to be valued more than gold in the next generation's point of view. Like I said, unless something dramatically changes, but based on the information that I have and what we have in front of us today, I think that's really the case. Okay. Amir asked about IWM. Yeah, we can take a look at the Russell. And the Russell, like the Dow, continuing to hold up very well. I mean, the Dow's, strong. Russell is strong, and I think both the Russell and the Dow really need to come down in order for risk aversion to really take hold. But if they're holding up the way they're holding up, and we're at highs, why should the markets really care at this point? They're going to continue to hold up well. I mean, we're past some extensions, it's divergent, but do you really want to short the Russell? No. Raj asks, where do I live? I live in Scottsdale, Arizona. And Igmar says India wants to abolish any kind of private crypto. Yeah, and you know what? I would venture to guess that there's going to be other countries coming after cryptocurrencies. Every country is going to want their take, whether it's in taxes, whether it's they create their own digital currency, which, I think they're all, talking about creating their own crypto digital currency. And once they do, then they will somehow regulate or tax or, ban other cryptos, but we'll see. Anyway, guys, it's choppy markets. Don't get too married to positions at this point. Stocks, and I want to point this out just from today. This is here. Let's go to the 4-hour chart of the S&P really quick. The one thing I want to point out is, while we're above this like 3,900 level in the S&P, 3,910, until we start making some lower lows, can't get too excited about any type of quote unquote risk aversion. The dollar is holding up pretty well though, for all things considered. The dollar index is actually holding up relatively well right now. And that needs to be considered as we go into this week. All right, have a great one, and I will chat with you. Oh, wait, I'm sorry. Amir asked about the DAX. My analysis, by the way, my analysis on the DAX, just so you guys know, is right here. I haven't updated it for today. This would be, I think Steve wrote the DAX analysis for the weekend. Okay. But, as far as the DAX goes, we have a multitude of 161% extensions coming into play. And I think while we're above this 14,200, no sense in being bearish. You just got to realize that there are multiples of, let me move that over. Multiples of the 161% extensions coming into play. Whether you're talking about the post-COVID move, the other moves lower past that, where all these are 161% extensions, all of them. Okay, so lots of resistance coming up. All right, have a good one, guys. See you later. Have a good one, and thank you all for your support. As always, I'll talk to you soon.